Welcome to this webinar. It's a session which will take 90 minutes. The session, like all the other 4 sessions before it, will be available also on our website, www.trademalta.org. And as I said, this will bring to a close the first series of webinars, and we hope and we are planning to bring you another series of webinars starting from October. Before I give the floor to Sibel, who's our main speaker today, apart from Gaetano here, of course, just to explain a little bit of housekeeping rules, as we always do. After my very short introduction, I will give the floor to Sibel to do the main presentation. I invite all participants to submit questions in the chat function that you have on Microsoft Teams, and I will read out those questions to the speakers, be it Gaetano in Malta or Sibel in London, immediately after her presentation. We always do these sessions with the support of HSBC, but today we have an international speaker from HSBC to deal with this very interesting session. As I said before, Sibel Silmagul is Regional Head of Product of HSBC. So Sibel, if you're there, good morning to you, first of all. What I will do next is I will share your presentation, because I'll be running your presentation myself from here. You'll have the floor and you'll do your presentation, and we'll come back with questions and the interaction after. So please, in the meantime, I encourage all participants throughout the presentation to submit questions that we can ask Sibel while she is here with us.
If we look into what happened, I think I would like to say or think, we don't know what's going to happen in Q4, but the worst is over. So we are kind of thinking that there's been a month of a survival mode with companies of different sizes. I think the large ones have been more resilient, but not necessarily even they were impacted. Smaller ones have been more vulnerable. And the companies that already had issues pre-COVID in terms of liquidity or their business model, I think they are the worst kind of impacted ones. If you look at the UK market, if you see some of the companies falling behind and filing for bankruptcy, actually, if you look carefully, they already had inherent issues even before COVID. So it just didn't help with the economic situation. So I think what we're seeing is with the treasury function, and also this extends into procurement to some extent, the review of operational flexibility, exposure, and the setup of the treasury. So from an operational flexibility, I think what we learned, and this has already been a trend, is to really make sure if something similar happens or on an ongoing basis with the shifts, to ensure that the companies have sufficient liquidity and credit lines to tap into. We've seen a lot of requests, and we were trying to help, and together with other banks as well in the market with the government support. So lots of credit lines, even for the large corporations that they haven't used so far, unutilized limits, they were tapping into those lines. So they were drawing under the revolving credit facilities that they haven't before. So it was interesting in terms of, with the drop in sales, how those credit lines came handy, and they had to kind of use some of those available limits. And then looking into, and this is a big theme, I think some of the themes I will be repeating throughout the session, because they're really the key items, and we see it time and again, and that's really the trend and going to be reinforced in the future. Supply chains and digital, some of them. So in terms of localizing and regionalizing, the companies realize that the cheaper, the further away, and I'll come back to these points, supply chains can be vulnerable. So they need to build, the just-in-time is great, and that's been kind of modeled in, but they need to build in just-in-case as well. So if from a trade war perspective, or from a closing the borders perspective, what if China doesn't work anymore? What if Vietnam is shut down? So where is the alternative? So thinking about the a bit nearshoring the supply chain. So that's one of the themes. And then how much time is needed to do these adjustments when you see the challenges coming in, and accordingly, how do you need to revise and review your CapEx requirements. And then on the exposure side, really kind of understanding the forecasts and revenue flows, whether in what time scale these revenues can be recovered, and understanding how we can service the clients, the customers, to purchase goods and services, reviewing the sales model. I'll come back to that as well. This has been really an interesting theme of e-commerce and direct sales with eliminating distribution. Sales model has been really tested during the last few months, maybe applicable to some of your businesses as well. And then reliance on intermediate goods as well, sourced from overseas. In terms of treasury setup, the digital agenda journey has already been happening, but this again triggered, even for us as HSBC internally, getting some of these approvals, getting some of the processes more digital, and completely automating the process has never been so kind of efficient and faster than before. I mean, for an unfortunate reason, but I think it helped with the thinking and making sure that our systems and platforms are up to speed, and we can do more transactions on digital basis. And some of the thinking of, from a large corporate perspective, leveraging the treasury hubs and reviewing the risk management guidelines, especially also on the supply chain finance. Some of the large companies we speak to, they are setting up their new risk management committees, if you will, for a supply chain perspective as a kind of a priority consideration, which didn't exist before at that strategic level. I think it's always been kind of managed, but it became more and more strategic. So maybe, Joe, if we can move to the next slide on optimizing working capital. So some of the key, working capital measures, and how what tools are available out there to kind of help you with to address them. So to kind of increase operational efficiencies and enhancing the cash flows. I think the first key item is purchase to pay. Obviously, trying to understand the supplier base, regional, local, as much as possible. Maybe that's the trend again, kind of trying to nearshore and focusing on the stability of the key strategic suppliers, depending on the sector as well. We've seen some clients, they have more the kind of high concentration on key suppliers. So the well-being and financial stability of those suppliers is critical. So if they are in a region or a country that's hugely impacted by pandemic or any other challenge, then there needs to be a backup. There needs to be a kind of or visibility on how to introduce the alternatives for that reliance of suppliers, and then how they can help those suppliers, whether they're large or small, to maintain to maintain their liquidity, so those suppliers can actually procure themselves. They can kind of be in a healthier position to be able to produce for the large buyers. And then injecting liquidity, I will come back to this again. It's a key item into deeper tiers of supply chain. I mean, we've been focusing a lot for years on tier one immediate suppliers, but then suppliers have their suppliers, and we know companies with so many layers of supply chains in fashion and apparel business. Like if you see a T-shirt and in a shop, it's I was amazed by the level of kind of agents, intermediates, from kind of a cotton all the way to die and all that levels, they're not always that visible to ultimate buyer. So it's very interesting to how actually we can tap into that and inject liquidity into that supply chain tiers. And again, digitizing the whole process. So some of the financial tools that are in the market and evolving to help purchase to pay process is obviously supply chain finance programs for the buyer credit risk, sustainable supply chain finance, which is becoming increasingly important. We've done a couple of deals with Walmart, and these are public, so I can mention Walmart and Puma. So it's really kind of encouraging the suppliers of these large companies to hold on to that some sustainability standards and metrics. These can be company introduced, internal metrics and validated, and the bank kind of needs to be comfortable, or there are third-party agencies that companies are using to verify their supply chains to qualify them as sustainable, or what's needed to kind of bring them up to a sustainability level. And this could be everything. This is not only child labor, or this is kind of a wide-ranging criteria from carbon emissions, and it can be very technical depending on the sector. If you're in oil and gas versus consumer and retail, obviously the criteria and the matrix will be different. And then the other solutions are pre-shipment financing for suppliers where there's credit appetite and risk appetite and limit availability. How can the banks help the suppliers, especially smaller ones, for pre-shipment kind of funding before they based on purchase order or based on some of the other algorithms. So that's kind of the period then that most of the time the suppliers need financing before they issue the invoice. It's not always easy to finance that because you're no longer on the buyer kind of high quality buyer risk, but you're moving to the supplier risk. So that's the challenge there. And the other products, I think you would all kind of be familiar with, letter of credits and guarantees to support the supply chain. Similarly, inventory financing forecast to fill is building a resilient inventory. Again, looking into nearshoring of production, focusing on the tier 2, tier 3 suppliers, really understanding the stock keeping units, rationalizing the inventory base, and really kind of building efficient production lines. And some of the financing tools to help with that would be asset-based financing, borrowing-based type of structures, commodity finance, and again, pre-shipment finance and tokenization to digital token, which is in the process of evolution. It's not fully commercial in the market, but that's kind of being introduced as well, again, to help tier 2, tier 3 suppliers to get the liquidity. And then obviously the key part, I think this is maybe more even relevant in kind of in Malta from a cash flow and financing perspective, is order to cash, how we can mitigate the risk, collection risk, customer risk. Payment terms can be extended to facilitate sales, but then it comes at the expense of the seller supplier working capital challenge. So that's where I think the kind of financing comes in, and digitize the process as much as possible. And how do we kind of, how does the Treasury look into collections and dispute resolution? So receivable finance is a kind of a key tool, financing tool to address liquidity as well as mitigating the credit risk. And forfeiting and letter of credits is the other point. Here, I think I just want to mention the key kind of partner that I think everybody's looking into, and how we have seen them behaving, insurance market. So we have programs with insurance, and they are our strategic partner with, like most of the other banks. The big insurance companies have been cautious, but we haven't seen based on the level of credit, we haven't seen significant withdrawal from them. They've been supportive, but they also have obviously credit concerns and adjustments and sectors that they've been kind of not very supportive or high kind of a risk premium. So in terms of mitigating the credit risk, it's kind of a joint proposition between the bank and the insurance market, which we work very closely with multiple partners. In terms of cash and liquidity overall, it's really kind of comes down to digitizing the process and having investment strategies in terms of where to invest the funds, funding structures, and the tools are on cash payment and liquidity, more kind of a virtual accounts and digital solutions, real-time payments to help with the liquidity position of the companies. I'm not going to talk. I will cover this slide in the next 2 slides line by line. So this is just a snapshot for you to have a look. So what we've done is some of the things have already been happening in the last 5-10 years, and some of the themes and the trends have been newly introduced and been triggered. So what we put is, what are the trends? What's the pace? Whether they've been accelerated because of COVID, and whether it was maybe time to really reconsider these things, and the world is becoming less global in a way, and how we kind of how we see them evolving from our own experience with our clients, and also from the market data. So these are the high-level trends that are kind of with different pace of change. And I'll now go into one by one to kind of briefly talk about each point. So on slide 5, I can go into the trends. So this is not in the order of let me double check. It's not in the order of really importance as such, but these are really the key points that we are observing that's impacting all the clients in some shape or form. So shift of trade from west to east, that's been happening. So that's not a kind of a new double accelerated pace that the middle income population growth in Asia, we've been observing it. Intra-Asian trade has been increasing. And what we have seen as a new item, unfortunately, COVID started in Asia, and it was spreading in Asia, but the impact, the moment it moved into Europe and US, maybe there is obviously a kind of a political view there. The way we managed it and therefore impacted the companies were not as good as Asia. So the impact therefore have been more a bit harsh on the European markets and the companies as well as US, whereas Asia was able to contain in a relatively shorter time. Still, it took a while, but relatively shorter time. So, and they were able to bring the economy back to speed. And they still kind of go through local lockdowns. But interestingly, what started in Asia, the impact overall wasn't that detrimental compared to what's currently happening in US and Europe. So developing markets will obviously continue to be critical. The second point is supply chain resilience. This is really, really important, and this is kind of where companies are really tested for that resilience. Diversification. I mean, you can assume that most corporates are already diverse, but it's interesting to see actually sometimes how reliant they are on some of the suppliers, on some of the markets. So that's not really kind of helping with diversification. So There's been a review on agility and diversification of supply chain finance and supply chains, transparency of supply chains. When we say transparency, we talk about how much do we know our kind of supply chains. If you are a large corporate, if you're a car manufacturer, it goes all the way to the mine in Brazil somewhere. So that visibility and transparency of complex supply chains is it became more critical, and that's why my earlier point of risk management of supply chains became more strategic, because now companies want to really understand where is the blind spot, where is that kind of risk in the bottom of the line that they may not be seeing. The geopolitical tensions between US and China, I don't think it's there, and probably in the short run it's not going to disappear, and maybe it's kind of a leading to decoupling from China. So we call it China. I think the other it's the market terminology as well, China plus strategy. So there's been a lot of reliance on China and what's in terms of high value add, but as well as low value add kind of inputs. China plus is, which are the other markets in Asia, or maybe outside of Asia as well, companies should consider for sourcing and for their supply chains. That's been going on for a while with the tariffs and shift to Bangladesh, Vietnam, Taiwan, India. So that's already been happening. But we will see probably a bit more of that. And then therefore, there is the higher risk and revenue mitigation requirement. There is more investment requirement in China plus countries, because China has been investing and was able to address the requirements of these big buyers. But when it comes to India, Africa, other ASEAN countries, are they ready to pick up what China cannot do? So we need to help as financial institutions for that base in these countries. The next theme is reshoring, nearshoring. We were kind of, there was a big trend on globalization, and now it's automation is changing everything. So with in terms of labor, in terms of production costs, it is making a significant shift in the way companies are thinking and measuring the costs. So do we need the production now? Again, in China, if we can do 3D printing in local markets for some goods, obviously for the time being, and it can be extended to other products as well. New technologies are helping with, again, lowering the production costs. Protectionism on top of that, governments have been intervening and pushing for reshoring or domestic sourcing to help the companies and the economy. So there's been a shift from low labor cost hubs to skilled labor specialized hubs. So if companies can automate the process as much as possible for car manufacturing in US, then they would just need the skilled labor, specialized subject matter experts, engineers, which can be actually located anywhere, or they can tap into these sources. So I think that's automation and digital is great with the new technologies, but it's also in a way impacting global trade and flows in an interesting way. So there will be obviously working capital implications because of the inventory stock and management would be more local. Initially, there could be higher operating costs, but I think in time that could be kind of leveled off. And again, the trade of intermediate products will be probably kind of reduced because of local production, and the domestic, it will help with the domestic trade growth. And the next item is on trend is on non-physical trade. which we have seen a significant pickup in the last few months. We call it services trade simply, or infrastructure as a service. There are different kind of ways of calling it, but you probably may have experience as well. E-commerce, Internet of Things, cloud-based services. There's significant shift from physical to digital, and it's been really challenged in terms of what we can do more digital, again, internally for us as well. We've been kind of looking into different things. The sectors, obviously, which were like really prominent during this time was tech and telecom, with developments in 5G, applications of 5G, and cloud computing services. Cloud business have increased significantly with working from home and companies doing more business online. So there is a higher need for strong kind of a cloud services. Shift from B2B to B2C. Again, this is about a bit more kind of simplifying the process, maybe getting closer to the customers, and eliminating the distribution and the retailers in between. And the client experience obviously has been kind of paramount in this journey. Networked and digitally connected supply chains. It's really kind of eliminating the layers and making it more transparent to all the parties. If we can move to the next slide to continue with the remaining few items. Sustainability has been, I mentioned in the beginning a bit, it's been a really big theme. We talk to almost every client about sustainability. They bring it out. There's been, beyond trade finance, I'm here to talk about trade finance and working capital, but beyond trade finance, you must be observing as well, there's a lot of green bonds, green loans, insurance market is interested, investors, funds are interested. So this is definitely not kind of a part of the annual report ESG agenda or reporting anymore, but this is being taken really seriously. And we are working a lot with the clients to help and to improve it much more. I mean, part of this is actually really consumer driven. I think us really kind of seeking for that sustainability, or we want to see companies actually being more responsible with a clear purpose and a social contract, not only having these reports, but having it more visible and more related to the consumer across businesses. Stakeholders are much more interested. So therefore, operating models are changing. Carbon footprint, again, these are in a way difficult to measure. So therefore, there are agencies helping the companies. I think this has been the challenge so far for sustainability. When you really want to apply it and implement it, it can be complex in the ways to measure it, to kind of go through the whole operations and the supply chain to understand where it's lacking and how it can improve. So I think there's going to be much more financing required in that area, and companies will be much more, irrespective of size. I think this is not a theme that's going to go away anytime soon, and it will be part of our future. We need to think about sustainability in all our kind of discussions and conversations with companies. Next one, again, based on the nearshoring, built on the nearshoring, onshoring theme. Governments have been intervening. We've seen some government support. What we've seen is, which was really kind of the pain point of this pandemic, in the most needed time, we didn't have the critical goods and services available. in UK, we didn't have any PPE. There was a waiting list, trying to find it from China, Turkey, wherever, India, who can provide us. I think that was a really wake-up call of, in terms of medicine, in terms of other critical goods and services. There hasn't been a self-sufficiency. So this is really something that needs to be addressed. That therefore, the next step is, if something like this happen again, like, do we have a backup plan? Do we have the recovery or disaster recovery plan? And how can we source this? So therefore, the strategically important sectors are kind of under protection and review now, how with the increased role of government. There's been in most of the jurisdictions, I think there's been government intervention in a funded or a non-funded way. I think we've seen much more non-funded in terms of guarantees of government to help businesses, and with the bank financing. The direct funding and financing by government to businesses, there are different numbers being kind of discussed and agreed by EU, but kind of also gets some public reaction, I guess, in terms of how the public money is invested in bailout of some of the businesses. So again, it's we need to be careful about the working capital implications and tariffs of as a result of this self-protection that the governments are imposing. On the item 8, vertical and horizontal integration, this has been again a big theme. Unfortunately, smaller, weaker companies, it was easy for them to go out of the business because they've already been kind of vulnerable. And there's been a strong preference by consumers for larger, bigger suppliers. So that, where does that leave the smaller, more fragile supplier base down the chain? So vertical integration became critical to have self-sufficient supply chains for the big companies. Sector transformation is more. So we've seen in a pandemic like this, some new sectors and business models have evolved, and this is more on the obviously digital online side, new opportunities. Some businesses were going out of business, and some businesses didn't have enough stock to satisfy the customer needs. So there was huge demand on sports related or indoor kind of activities. Real estate became under a big question. So we are in Canary Wharf. It's a very valuable area with so many high-rise buildings which are currently empty. So that kind of a question mark of real estate models, how they're going to be sustainable. Retail businesses have to change. Retails without online offering have suffered a lot. If you only have physical store but no online proposition, then that's kind of a issue. Similarly, aviation sector has been really impacted, and hospitality, which is, I think, very slowly recovering. Even with the opening of the sector, there's still kind of a low take-up in terms of economy. So I think that's mainly on the supply chain trends that we are seeing, and just maybe going the next couple of slides. I'm conscious of time as well. I will just kind of touch on the kind of the similar themes, but maybe in terms of how we can address some of these points on the mega trends and the examples of some companies and how financial institutions can help. So the number one is building supply chain resilience, this is really important. I mean, there has to be a really kind of a critical view of the resilience of supply chains. It cannot stay the same because we've seen issues around this. So diversification and finding new partners is important. Deep tier suppliers, invisible suppliers should be identified. Some of the companies we talk to, they know their tier 1, they know their tier 2, but if there is a critical, again, maybe I always give the car example, but at the tier 3 level, if there is a critical small deep down supplier that's making one component for the car, or that's providing one component of the car, without that and with the failure of that, the car is never going to be finished. So I think it's important to understand what is coming from where, and it's how is it impacting the overall production. Again, vertical integration to be self-sufficient. I think we can talk about enablers going back to digital. Data is really important. Trying to get the correct, accurate data in terms of visibility of the inventory, AI for decisioning, forecasting real time for cash flow. We have some, and it's kind of helping with the decision making. We have some tools in our platforms. We are developing for some supply chain finance transactions, but for treasury function, this is really kind of critical to have that real-time forecasting. Again, 3D printing, I think it's just going to expand without a question. Working capital finance will obviously help, but it needs to extend to pre and post shipment, because I think the application on pre-shipment to support the suppliers today can be somewhat limited. Again, on the interplay of protectionism versus market openness, it's reshoring, nearshoring has been it's helping with the shorter supply chains. It's been triggered by punitive tariffs, obviously, and regulatory barriers, but that's going to be, I don't think that's going to change anytime soon. So the new technology will help with the in-house kind of automation and production to the extent possible. Not everything will be able to produce end-to-end in onshore or near shore, but even within the kind of EU standards, there's been a lot of shift to Czech Republic, Poland, and some of the countries from Asia, as we've seen from our kind of clients' production facilities shifting. So that's been an interesting kind of shift to Europe, which is in itself kind of a good news from an economic activity perspective. I think the next on slide 8, on being really closer to customers from e-commerce is really important. We are involved in some of the marketplace discussions and platforms. The likes of obviously Amazon has done really well in terms of managing the merchants and being able to connect that massive kind of a demand with the customers and the merchants on their platform. So the likes of Alibaba, Amazon, these sectors and these players are, if you will, what we call the winners of the, there are winners and losers from this pandemic, but they're more on the kind of a winner's side. And the other key theme here is servitization, which is kind of an interesting new term. So it's no longer about just selling something to a customer and then forgetting about it. It's service elements. So that's why we said in the previous slide, from physical to digital and service, non-physical actually. It doesn't have to be always digital. But service is always becoming part of that process. So we're no longer kind of just selling a laptop or selling a commodity, but bundling it with the services and really kind of owning that in the long run. It's becoming a bigger part of the revenue generation compared to the commodity itself. It's adding on to the if we look at the revenue generated from service-related kind of a turnover, it's been increasing steadily for large companies. And accelerated digital connectivity, I think I can talk a lot about this, because this is really the future. I mean, everything is becoming, as to the extent possible, digitized. Innovation in every area possible. Digital collaboration. I mean, home office setups. I think they will stay. Working from home will kind of be prominent, and the cloud demand, as I said before, has been incredible. Kind of a increase in requirement from the likes of Microsoft, Amazon, Google. That connectivity is there to stay as well. So I think with that, I've overrun. And the next, I think you will receive these slides. The next couple of slides actually building on the same themes exactly, and just kind of talking about which you can refer later on as an appendix, which is how the financial institutions are kind of responding to some of these issues, and how we are modeling the future with the solutions. So with that, Joe, maybe I can hand over to you.
But like you said, just in time and just in case, are we going in for a period of, where planning becomes, we're planning for things which are so uncertain that the scenarios essentially make little sense, and they're just academic? Or can we actually do some planning?
I think, yes, I think definitely there should be a critical review of the supply chains in terms of the long-term strategies, and the planning is possible. I cannot think of the planning without the digital tools and automation and forecasting tools. I mean, today we are looking at transactions, or we're looking at financing two companies trading with each other based on algorithm or based on forecasted kind of sales on the back of an historical data. So I think, yes, definitely with more visibility of supply chain, companies can have more meaningful kind of a forecast, and then they can say, just in case if something like pandemic happens, this is my plan B, and I'm actually well protected, and I'm covered for this to this period. So I'm okay for 6 months, and then I need to kind of plan for the medium term. But I think that requires, to some extent, a digital intervention and technology.
We've had webinars before on artificial intelligence and digital marketing, and everyone obviously, is kind of underlining this whole point of being digital and being digital in a smart way to be able to kind of try to foresee and all kind of scenarios. Another very interesting point you raised, Sibel, is about nearshoring, and I want to kind of bring the discussion a little bit closer to Malta in this sense, though obviously we are part of a global reality out there. But nearshoring, I'm not sure if you share this view, favors, if you like, the small peripheral countries like us. Is this the view from where you stand as well? You being at the center of, I guess, a global, marketplace in London where you are, and as part, obviously, of a global, company like HSBC.
No, I think absolutely. I guess in terms of fashion, retail, and some of the other sectors, it could be healthcare, it could be industrials. So what was the reason for Asia, right? The number one, the biggest kind of a point was about labor. And then, there's kind of a higher transportation costs. But what we are saying right now is if there are challenges with tariffs, if there are challenges with with that kind of a really offshore delivery, and if we can bring automation back home, and this is what US is arguing for, applying it in different states, which is kind of we can think of as EU market because we are in the same marketplace. So smaller countries, I think, can adopt a similar approach, right? In terms of if there's an automated, low labor cost production facility, some of the goods and inputs can be certainly delivered from smaller sites. I mean, I can't give client names, but as I said before, we've seen this happening in the last 6 months. Actually, post Brexit, started with a bit post-Brexit, but there's been a lot of shift to Czech Republic, Poland, Romania, some of the markets, and I'm sure Malta has probably had its share as well. So yes, I think it's a favorable kind of a movement, as long as it's economically viable. So I think that's needs to be viable, obviously.
I imagine so. Thanks, Sibel. I wanted to, allow Gaetano to join this conversation as well. Gaetano, you've heard, the mega trends and the issues that Sibel was raising, essentially on what's happening on a global level. You're standing in Malta. You've lived, I guess, this period with clients, with Malta-based clients interested in internationalizing and, trying to assist them in the best way the bank can in trade finance, etc. What's your view of how we're connected to this kind of global reality standing in Malta?
I can relate to what Sibel was saying from the European perspective. So Sibel has an overall view of something like 20 countries, as far west as Bermuda, as far east as Russia, as far south as South Africa. But in reality, we are affected by the same trends and nothing. For example, we have seen a recent demand for pre-shipment payments because obviously suppliers are changing. As Sibel was saying, there's a focus from the supplier side on the lower tiers of the supply chain. So that is going to affect the supplier-buyer relationship. And we're seeing a lot of our clients requesting pre-shipment finance, getting a discount in return, which is nice for business as well, to accommodate the new norm and the new reality. Another point which struck me is the added focus on non-physical and services trade. We're seeing I don't.
Go ahead.
I lost volume.
No.
We're seeing an added focus on non-physical and services trade, and on the export side especially, which is very gratifying for the local economy and of course for the clients involved. Quite hefty services which were tried and tested locally being exported as far as Asia Pacific, Pacific Rim, and even west to the US. So yes, the global trends Sibel were mentioning are directly and indirectly affecting the local marketplace. On HSBC's side, we are prepared to finance, support these new and existing initiatives by a variety of products and solutions. So please contact us in case of need.
Absolutely, as always. I have, Gaetano, and I'm not sure if it's for you or for Sibel, a question by a participant on export finance. I'm not sure if he means export finance in the wider sense or export guarantees, to be honest. I'm not sure if Sibel wants to intervene on something like export guarantees in general, or both, the participant is saying, and then we'll go to the Malta kind of situation with Gaetano. Sibel.
Yes, sure. I think again, export finance can be kind of structured in different or various financing tools. Guarantee is definitely one part of it that can be supported through either credit agencies, which we've been discussing during this period as well, or insurance market. On the other side, it could be open account. We're seeing a bit more shift to open account despite the pandemic. So it could be financing the export sales, again, with the right risk mitigation. But yeah, so I think it needs to be really kind of enable the liquidity for the seller to get the right terms, payment terms, because there's always this kind of a trick there, providing from an export perspective, providing the kind of the right payment terms to increase the sales versus the stretch and the strain on the working capital itself. Then I think the requirement comes from either from a risk mitigation insurance or a bank to help exporters with that. But maybe Gaetano can provide more insight on the local market application.
Export insurance is actually up and running, but it has to be arranged at this stage locally, privately. We have products, obviously, from HSBC's side, which can include export insurance, and actually it is one of our foremost products which can aid exporters. As a general marketplace, I'm aware that there were initiatives from Malta Enterprise to do sort of government scheme for export boosts, but at this stage we haven't seen any. So, but I would suggest any exporter to privately do export insurance, because obviously the risk profile changes, the financing appetite of banks will change when an exporter has export insurance set in. So I would strongly suggest either to speak to your banks or speak to us, where at HSBC we have an integral part of a product which is insured expressly for this purpose.
Sibel, I want to ask you about something which is fairly recent, so I would understand if you don't have a position on it as yet. As you know, the European Union has agreed a budget, and obviously that budget was with the pandemic in view and with the potential economic hit that countries might experience post-pandemic. Do you think this is going to be relevant, and will it in any way kind of change or provide impetus to the trends you were mentioning? This EU package, which is quite substantial, I would say.
Yeah, that's a very good kind of a question. Actually, it links into this protectionism of governments trying to support and help the economies and critical industries of the country. I don't think it's going to be available to everyone, and I don't think it's meant to like bail out each and every industry. But I think there will be a kind of a priority, which we've seen in the government support, unfunded support as well. In terms of if you're in medical, if you're in kind of some of the other agile industries where you are a fashion retailer, but you can immediately produce a kind of a PPE stuff. So it kind of follows in. I think it's good news. It's great news, and it will help hopefully with the nearshoring and survival of the smaller businesses. But I'm not sure how that's going to be. The allocation of that fund is going to be between number of companies.
One kind of final question from my end, Sibel, is, these are very interesting kind of macro trends that obviously have an impact on each and every, company functioning in the economy here in Malta. But if you had to give, one insight, one word of advice to a company, on a micro level, now that we've kind of lived the first phase, if you like, of the pandemic, and assuming it's an internationalized kind of company, what would be one area you would want them to kind of focus on, give importance to in terms of budgets and in terms of real effort?
I think I would say digital, because it's it kind of helps everything. So automation and digital it will simply increase anyone's competitive advantage, right? If you're able to, as a small supplier, if you've sorted out of your automation or flexibility, then I think your bargaining power and negotiation tools with the bigger buyer is going to improve. It kind of touches on everything in terms of investing in new technologies. I mean, with the new technology, again, so many things can shift from Asia to Europe if that technology is available. I mean, today China is doing so much that we are not even aware of how much AI they are at all levels, and I think they are still kind of winning. We still need to buy masks from them, right? Like, we're not still in Europe having enough masks as of today. They are still kind of able to, it's not a complex production to make masks. You can make millions of masks in a small factory, but why is it still cheaper there? And it could be done in I'm from Turkey originally. It's still probably more expensive than China. So it's interesting how they are able to, and I don't think in the long run labor cost is labor cost, but I think it will all come to automation and new technologies to be aware of and to apply them as small as possible. It doesn't have to be a big investment, but it could be a small enhancement to start with.
We had the kind of same advice from speakers we had before you, interested in artificial intelligence and kind of web and digital marketing. We have a question from a participant, Sibel, which is a bit at a tangent, if you like, from the discussion we've had so far, but I guess still interesting. Thanks for the webinar. My question is about the new status of Hong Kong. How do you see that would affect international trade and finance? We are aware of the limits of time, but I'm sure that from where you're standing, you have a vantage point on the status of Hong Kong as well.
Yeah, so I don't think I can say. So I'm working for a Hong Kong Shanghai banking corporation, and obviously us being part of that significant economy. So I can't say anything specific to obviously HSBC. But what's so I think maybe what I can say is. With the tension and with what's happening in Hong Kong with China, there are some companies or funds or asset managers that are already being flexible with operations in Singapore, right? So if you have that flexibility, so we've seen some of the funds and some of the offices, procurement offices, moving to Singapore, or sometimes they have it in both locations. They have it in Singapore and Hong Kong as well, or some other site. So I think in the near term, what we may see maybe some shift from there to other centers, finance centers in Asia. Again, I'm saying Singapore because that's the most prominent one. So from a company perspective, but also from deposits, funds, asset management, and those activities. So it will be interesting to see how the whole situation is going to evolve, actually, which may have. But right now, I don't think companies are making like a drastic changes, or there isn't a kind of a significant change as of today.
Great. I have no more questions from my end. I want to remind the participants that this presentation and the whole webinar, like all the other 4 webinars we've had before, will be available on trademalta.org. All the presentations, as you know, are being uploaded a couple of days after the webinar. As I told you before, our idea is to bring you more webinars for the period between October and December, and we're planning this, and please let us know if you're interested, and if you're interested in what kind of subjects. This has been quite a positive experience for us. I want to first thank Sibel specifically for finding time to be with us today and providing us with such interesting insight. Hopefully we'll be able to follow this up and work with you in the future as well. So Sibel, thanks a lot for your time. Thanks to Gaetano for being here today specifically. But obviously, thanks to HSBC in general for being our strategic partners and for making these webinars as well as a lot of our activities possible over time. Thanks to Studio 7 as well for providing the technology and the technical backup for these webinars. So I'll bring these webinars to a close. A final thank you, of course, to our team at Trade Malta, Anton, Josian, Richard, etc. And we'll close it here, and hopefully we'll be with you for the next series of webinars in a few months' time. Thank you very much.